Hi everyone, this is Mrs. V Chen. Welcome to my Form 4 Accounting lesson number 9. And today is 19th March 2020. Okay, we're going to look at chapter 4, which is about bad debts and allowance for doubtful debts. Okay, so what happened in this chapter? We always make sales to our customer. And then what about if we don't have money received yet? However, we receive money later from customer, then it will be a kind of credit sales. So here is my double entry for credit sales. So with credit sales, sales is always a credit item. And then since we have no money received yet, our customers will be our debtors. And then same as trade receivable. But what about something very bad happens to us? For example, if we have our debtors declared bankrupt, all right, that means we will have no hope to receive any money from debtors. And then this is the idea about bad debts written off. So what is a double entry? So since we have no hope to receive money from debtors, we cancel debtors by credits, trade, receivable. Therefore, since we have no hope to receive money, we are going to suffer, and then we are going to make a loss, so that we debit. This is new account to us today. We debit bad debts account, which is a debit thing in the profit and loss account. So you can see we will have our expenses bigger, so the net profit will be smaller. And then this is bad debts, okay? All right, so if you go to your textbook, and then on page 130, you have this meaning for bad debts. And bad debts refers to accounts receivable, or trade receivable, or debtors that have been proved to be uncollectible. That means we will have no hope to receive any money from our customer after credit sales. All right. Okay, so after bad debts, now we come to allowance for doubtful debts. Doubtful means we are not certain. We are not sure about whether we can receive money from debtors. So therefore, we debit profit and loss. So what happens if we debit profit and loss? That means expenses will be larger, net profit will be smaller. Okay, let's make comparison for this one and this one. Both of them are a bad thing, are expenses in the profit and loss account. But this one proved to be bad. That means we have evidence to prove it. But what about this one? Even though we are not sure, even though we don't have evidence to prove that we cannot receive money from debtors, but we still do our estimation. So therefore, this is because of prudence concepts that we follow. So what does meaning prudence concept? It means that we don't overstate the good thing. So what are the good things? The good things are assets. The good things are the net profit. We should not overstate that, okay? And at the same time, for the bad things in the business, expenses are the bad thing, liabilities are the bad things, we should not understate the bad things. So this is prudence concept. Okay, so based on prudence concept, we provide allowance for doubtful debts. We make our estimation and say how much will not be collectible from our debtors. Okay, now we come to the first example, so which is year 1, and then at the end, that will be 31st December. Okay, so let's say we have trade receivable, which is equal to 12,000. Okay, just assume that we have trade receivable after credit sales. And then there are 2 adjustments related to that. So one is before 2,000 bad debt written off. So therefore, we need to do the double entry for that. So what is the double entry for bad debt written off? We debit bad debts 2,000, and since the debtors will pay us no money, we are going to cancel trade receivables also by 2,000. All right, and here after the double entry, I have this bad debts account, so and the current assets to show trade receivable. Okay, I do posting now. So debit bad debts. So here is my bad debts account. And then I put 2,000 here, right? And the date is 31st December because of trade receivable. Is that right? And also, and look at trade receivable. What is trade receivable? Trade receivable should be current assets in the statement of financial position. So that I have this trade receivable to start with 12,000. Okay, since I have this word before, that means this 12,000 has not yet include the 2,000 bad debt written off. Now I credit trade receivable. I have to minus 2,000 because this 2,000, this debtors owing us 2,000 will pay us no money. So okay, after adjustment for bad debt, so I will have 10,000 here in the statement of financial position. Okay, so number 2, now I estimate that 2% may not be collectible from the debtors. All right, so therefore we debit profit and loss. Okay, because of prudence concept, even though this is not proved yet, but we still need to recognize this as expenses. Okay, and credit allowance for doubtful debts. Okay, so therefore, so what is this 2%? So that will be this 2%, so 10,000 times 2%. Okay, so the estimation on allowance will be times 2, 0.2 will be 200 and 200, okay? Okay, so after this double entry, I do posting. So debit profit and loss. So this is 200. So I have my profit and loss 200, right? Because of allowance for doubtful debts, I just do posting. And then credit allowance for doubtful debt. So here is allowance for doubtful debt. So I have 200, and this is year 1. Okay, and 31st December because of profit and loss. Okay, and then actually this profit and loss account is same as the income statement, but I just use T form to show you. All right, so this is my posting. Okay, next, when we close bad debts and allowance for doubtful debts, I have to tell you bad debts is a nominal account. What does mean nominal? Nominal means we don't have any closing balance. Means that we have to close it in the profit and loss account. So now I close it, credit bad debts, and here, debit profit and loss. So which is bad debts written off. So this is about the treatment for nominal accounts. And then what about allowance? Allowance is a kind of real accounts. So therefore, after this posting, we close it and write it as balance carried down. And this balance carried down will be opening balance in year 2. Okay, and also allowance is a credit item, is that right? So when we show this in the statement of financial position, since trade receivable is a debit item and this one is credit, so to put them together, we have this minus. Okay, because this is a credit item and this is how we close. All right, so 2% just now is my estimation. So 2% on 10,000, which is 200. So therefore, this one minus this one, 9,800 will be net trade receivable. Okay. Okay, now year 2, and then at the end of year 2, so after we have run the business in the second year, assuming that we have trade receivable, which is 25,000, and there are 2 conditions, and after that we also have this bad debts account and allowance for doubtful debts. Okay, so remember which accounts that we have closing balance in year 1. So that is the allowance for doubtful debts account. So this is the closing balance in year 1, and the closing balance in year 1 will be opening balance in year 2. So that here I start with opening balance year 2. All right. Okay, and the condition for bad debt written off is debit bad debts and credit trade receivable, same as before. So that I do posting. Here I have bad debts, debit bad debts because of trade receivable, and then credit trade receivable. But look at this. This is after. That means my 25,000 given to you is already deducting this 3,000. Okay, so therefore, when I have my trade receivable in the current assets, which is 25,000, already deducting bad debts written off because of this word after. All right. Okay, now let me close bad debts. So bad debts is nominal, same as before. If it is nominal, that means we don't have any balance carried down. So we have to close this 3,000 into the profit and loss account. So therefore, in my profit and loss, I have 3,000 here, right? And the description is bad debts written off, okay? And then look at this allowance for doubtful debts. Now, this time, you have to remember the sequence. So the sequence will be, number 1 is opening balance. And number 2, we go to closing instead. So this is my closing. And how do I get closing? Okay, I need to refer to trade receivable. And then we always have allowance for doubtful debts. Here, is that right? And what is my percentage this time? Oh, I give a higher estimation because if the figure is bigger, then the chance for not receiving money may be bigger. All right, so therefore, if trade receivable is 25 and now my estimation is 3%, so how much is that? So that will be, let me use calculator, 25 times 3%. So this will be 750, okay? Now, step number 1, opening balance. Step number 2, here. This is step number 2, the closing. Okay, so closing, which is 750, like that. Okay, so opening from last year, closing from this year's statement of financial position. So if I use that 25,000 minus 750, so I will have 24,250. Okay, so this is how we do for allowance for doubtful debts at this moment. Again, number 1, opening, number 2, closing from the statement of financial position. Okay, next, look at this account. So we have 750 as closing, which is bigger than 200. So how do we change from 200 to 750? That means this is new things to us. We need to provide more provision, more allowance for doubtful debt. So we say that we have there is increase in allowance for doubtful debts. Okay, so why allowance for doubtful debts? Because now we have closing balance, which is bigger than opening balance. Do you agree with me? Closing 750, so this is 200. So to increase it, this is increase it. Okay, so good thing or bad thing? This is the bad thing because allowance is not a good thing to provide more. So therefore, we credit allowance for doubtful. That's why we credit, because allowance is a credit item. Now we have to provide more in order to change from 200 to 750. So how much is that? How to change from 700 to from 200 to 750? So that will be 550. That will be 550. Okay, so therefore we have this double entry for increase in allowance for doubtful debts. That will be debit profit and loss, credit allowance for doubtful debts. But be very careful. So how much is increased? We need to make comparison between the opening balance and the closing balance. Okay, let me do posting. So debit profit and loss, 550. All right, so here is my profit and loss. So I have 550. And why? Because this is increase in allowance for doubtful debts, right? I do posting, and then now credit allowance. So here is allowance, credit, this is credit side, so 550, and we do that on the last date, and the reason is profit and loss. Okay, so this is step 3. Okay, now let us check. This is 200, this is the change. So I have 750 here, and here also 750. So you can see this is a very special treatment in the allowance for doubtful debts account. So always remember the sequence. Number 1, opening balance from last year. Number 2, go to closing balance. Okay, where do you get closing? From the statement of financial position. And lastly, we have increase in allowance. So here, we have increase in allowance, which is the change to complete everything in year 2. Okay, so year 3, also at the end, we have this trade receivable. Let's say this is 18,000, but before that, let's take a look at this allowance for doubtful debts. This is the real account. So let's check, do we have closing balance in year 2? Let's go back to closing balance in year 2. Yes, and this closing balance 750 will be what? Will be opening balance in year 3. So that this is my step number 1. Okay. And now let's look at the condition here. So the first one, before 3,000 bad debts written off, and then this is a double entry as usual. Now I do posting, so debit bad debt. So here is my bad debt account, right? And then trade reason is trade receivable. Okay, and I have this trade receivable as current assets, 18,000. So therefore, this time I have to minus 3,000 from 18,000 because of this word before. So this one is not yet deducts 3,000 bad debt written off. So that I have to minus 3,000 here for bad debt written off. So how much left? So that will be 15,000 for trade receivable, right? Okay, so next, what about bad debts, which is nominal? Nominal means what? We don't have balance carried down. So this is 3,000. We close it to the profit and loss account. Okay, so that I have 3,000, and which is bad debts written off as usual. Okay, and now what is my estimation? I put 2% for estimation because of prudence concept. Okay, and look at the step here. Very, very important. Step number 1, opening balance. And what about step number 2? So step number 2, 31st December, balance carry down, number 2. So number 1, opening, number 2, closing. So how to get closing? I need to refer to the statement of financial position. So I have this allowance for doubtful debts, and then my estimation is 2%. Okay, so how much is that? So 15,000 times 0.2, so 300. Okay, so 15,000 minus 300. So this is my net trade receivable, but it doesn't matter. So this 300 will be my closing balance, so 300. Okay, all right, so next, look at this. How do we change from opening 750 to 300? That means in year 3, we have this decrease in allowance for doubtful debts, because this time we have closing balance is smaller than the opening balance. So allowance for doubtful debts is not a good thing. Now we have decrease in allowance. That means this is a good thing because we have smaller bad things. So the good thing is credit profit and loss. To decrease allowance, allowance itself is a credit item, so that we debit allowance, we go to the opposite side. To decrease it, okay, by how much? By the change, by the difference between closing balance and the opening balance. So how much is the change? Which is 450, which is 450. So therefore, this is the posting. So debit allowance. So here, this is 450 and 31st December because of profit and loss. And then now we credit profit and loss 450. Therefore, the description is decrease in allowance for doubtful debts. Okay, so this is my posting. All right, and then after that, you check. So how much do we have on debit side and credit side? 750. And here we also have 750. Again, what is the sequence? Number 1, opening. Number 2, closing. Number 3, the change. And what is the change in year 3? Closing. which is smaller than opening. Therefore, we have decrease in. Decrease in allowance is a good thing, so that we credit profit and loss and debit allowance by the change. Okay. Okay, so year 4, this is trade receivable at the end. Okay, and now we have these two conditions, which is after bad debts 1,000 written off. So therefore, this 32,000 already deducts 1,000. All right, so now the double entry, same as before. So debit bad debts and credit trade receivable. So here is my posting. So debit bad debts. Okay, and this is my trade receivable, 32,000. Okay, this time I don't need to minus 1,000 because it is already after bad debts written off. All right, and what about this bad debts is nominal accounts, so that where to close it, we don't have balance carry down, we close it to the profit and loss account. So therefore, this 1,000 and this 1,000 in the profit and loss account. So this is how we close it, as bad debts being a nominal account. All right, and what about allowance? Allowance is new, so that we will have opening. So where to get opening? You refer to year 3. This is closing in year 3, which is 300, so that I start with 300 as opening, right? Okay, and what is the percentage? I estimate 2%, same as before. So to close it, remember the sequence. This is very, very important. Number 1, opening. Number 2, closing. So 31st December, balance carry down. So where to get closing depends on the percentage. 2% here, allowance for doubtful debts. So 2% on 32,000 times 0.2. So that which is 640. So here I also have 640. Okay, let's look at that. 640 is closing. Closing is bigger than opening. So what happened? Therefore, we have increase in allowance for doubtful debts, and this is no good, so that we debit profit and loss and credit allowance for doubtful debts by the change. So how much is the change? So 640 the closing minus 300. The change is 340, 340. Okay, now what is the posting? Debit profit and loss. So I have 340 here, and the description is increase in allowance for doubtful debts, right? And credit allowance, so here is credit allowance by 340. The date is 31st December, and the reason is profit and loss, and this is step 3. So step 3. Okay, so let's check 640, 640. So done on the debit side and credit side. And so how much is net trade receivable? So 32,000 minus 640. So that would be 31,360. Okay, so this is all about bad debt written off, and then the adjustment for allowance for doubtful debts. Okay, so now year 5. So 28,000 being trade receivable, and this time I have added something new here, which is bad debts recovered. Okay, doesn't matter. I explain to you soon. All right. So again, let's look at this allowance for doubtful debts. So we have this opening balance in year 5. So why opening balance? Because last year, this is year 4, we have this closing balance 640 as the opening balance in year 5. All right, so the new thing is this. So check 1,000 received from debtors, from debtor whose debts had been written off in year 4. So do you remember that in year 4? So let me go back to year 4. We have this bad debt 1,000 written off. What is meaning of bad debt 1,000? That means this customer will pay us no money. Okay, but now we have good news. Now we have check received from the same customer. All right, so we call that bad debts recovered. So which will be exactly opposite to bad debt written off. So this time it is a good thing. So that good thing on credit side in the profit and loss account. So credit bad debts recovered. All right, and debit trade receivable by 1,000 and 1,000. Okay, so you can see the double entry for bad debt recover is just opposite to bad debt written off. Okay, and now we have check received. So what is the double entry? We debit bank, means we have more money in the bank. All right, and which is credit trade receivable as usual. Is that right? Okay, now, so therefore, the treatment for bad debt recovered, we always have two steps, 1 and 2, A and B here. So actually, which one is important? B is the most important thing. All right, B is the indicator. All right, as no money, no talk. So if we don't have actual money received from debtor, we don't say that we have bad debt recovered. No, this is important. Are you okay? All right. Okay, now I do posting. So debit trade receivable and then credit trade receivable. What happened? Actually, this debit and this credit cancel each other. So we can say that bad debt recovered actually has no effect on trade receivable. All right, now here, credit bad debts recovered 1,000. So here I have my 1,000. Okay, because of trade receivable. Okay, and bad debt recovered is same as nominal accounts. What is the meaning of nominal? Nominal means we don't have closing balance. Okay, we close it to the profit and loss account. So therefore, this is my profit and loss account. So I have profit and loss, this bad debt recovered on the credit side. Recovered. ERED. So you can see bad debt recovered is just opposite the bad debt written off. This time, this is positive. Right. Okay, closed. And what about trade receivable? Bad debt recovered has no effect on trade receivable because this is debit 1,000 and credit 1,000. So what I put for trade receivable in statement of financial position, I just put 28. So here I have my 28,000. All right. Okay. So next, this time I provide 1% on allowance for doubtful debts. So here, this is 28, and then 1% is my estimation. So that will be 28. So 28 times 0.01. So I have 280. So remember the sequence here. Number 1, opening. Number 2, closing. So the date is 31st December. Balance carry down. How much is my closing? So 280. Remember, 280 closing smaller than opening. So that what is our conclusion? We have decrease in our allowance for doubtful debts, which is a good thing. So good thing on credit side of the profit and loss account. To make less allowance, we go to opposite side. So we debit allowance for doubtful debts. By how much? By the change. So how much is the change? The difference between opening balance and closing balance. So here is 360, 360. Therefore, a debit allowance 360. So here I have 360. So number 3, the change, 31st December, profit and loss, and then I just make everything fit in my allowance for doubtful debts, right? And credit profit and loss, 360. So this is about what? Decrease in allowance for doubtful debts. So in year 5, we have 2 good things. One is bad debts recovered, one is decrease in allowance for doubtful debts. And what is the new thing in year 5? Which is bad debt recovered. All right. Okay, so final conclusion in this chapter. So we have bad debt written off, and then we have bad debt recovered, which is exactly opposite to bad debt written off. So therefore, we have these 2 double entry. One is for bad debt recovered, and one is money received. So however, if you put these 2 together, this trade receivable and this trade receivable cancel out. So sometimes we can use net double entry for bad debt recover, which is debit bank, saying that we have money received and this is good news. So credit bad debts recovered. All right, so here we have the net double entry for bad debt recovered. And also, so after this allowance for doubtful debts, we may have increase in allowance and decrease in allowance. Okay, so if we have closing bigger than opening, so therefore we have increasing, no good. So debit profit and loss and credit allowance for doubtful debts for increase. And how much is that? The change. The change means the difference between opening balance and closing balance. All right, now the opposite for decrease. Decrease means which one is bigger, means closing is smaller than opening, so which is a good thing. So we credit profit and loss and debits allowance for doubtful debts. Okay, so therefore this will be all the things in chapter 4. Okay, so thank you for watching my video. I'll see you next time. Bye bye.